Good morning and welcome to the Money Control live stream. You are watching another edition of Markets with Santo and CJ. It looks like the bulls are trying to show some fight on the Wall Street today. After 3 days of losses, it seems we are in for a moderately positive start. We probably if you look at the US stock futures and the rest of the Asian market, there is a hope out there for bulls that today we could finally buck the weak trend.
Yes, interesting. In the last couple of days, Indian markets have been fairly resilient to the turmoil that's been happening in the US markets. That said, CJ, I've been looking at this mutual fund numbers a little closely.
Why is that?
There's been a fair dip in net inflows into equities, isn't it? 15,000 crores for April.
On a month-on-month basis, yes, Santo, but it's still a strong number if you account for the fact that no fund offers were happening in April because of the SEBI demanding that mutual fund pause some of the new fund offers at this point of time. And if you take that into account, 15,000 crores of net inflows is still a pretty strong number. On top of that, SIPs, although they dipped month on month a little bit, very slightly, but they were still very strong at more than 11,500 crores. So I would not be so concerned about mutual fund now, at least not right now. Maybe we'll have to wait and see how if this trend continues for another 2-3 months.
Well, the big story right now seems to be playing out in the commodity markets right now. Till a couple of months back, commodity stocks were the toast of the town. Everyone was trying to, everyone couldn't have enough of Tata Steel, Hindalco, Nalco, SAIL.
Same here. I could not have enough of
them. And suddenly, now that central banks have started raising rates, these very stocks seem to have become toast. Now the question is whether this the commodity story is over. You're seeing sharp pullback, whether be it aluminium, whether be it copper. Copper has fallen to almost an 8-month low. Zinc prices are at their lowest since Feb 25th. Aluminium prices also saw very sharp spike, just around the time of the Russia-Ukraine conflict, but now they too have come off considerably. So I think right now commodity is not a very pretty place to be in.
Well, look, I mean, to answer your first question, has the tide turned for commodity prices? Hell no, they have not. Let's remember one thing, okay? Commodity cycles, commodity bull runs tend to run for many years, 7 to 8 years on average. You can't just discount it after just 2 years of rally, right? It is very natural for these sort of short-term corrections, sharp corrections to actually take place. You remember, not so long ago in September, October, we had the first dip that happened in the commodity prices because of concerns that China was slowing down, right? And then again, the sentiment picked up, and for the next 6 months, we ended up going back to record highs. If you talk about aluminium, you talk about iron ore, you talk about copper. Now, yes, we are seeing another dip here, and you will probably know better, why this correction is happening. But for me, this is no trigger. You look at the demand side of the picture, right, Santo? Yes, COVID-led slowdown in China has right now, and if you look at the other side of the picture, in the West, where there are concerns about a slowdown in US or a possible recession in US, that has given investors a little bit of heebie-jeebies right now, and they are thinking that demand is going to slow down considerably. But for me, this commodity cycle is going to be the way the 2000s was for the commodity market. We all know about the super cycle in commodities from 2004 to 2011. I think this is another new cycle that we have gotten, and it is not going to get over anytime soon.
Well, I would be a little cautious out there, CJ. See, what is happening is, well, there is merit in what you say, but look at it this way. The whole Russia-Ukraine conflict, that has considerably decreased visibility on both output as well as demand. Things are not playing as the way most people thought it would be. See, when Russia invaded Ukraine at the start of it, there's a general consensus, every single thing just needs to go one way up. Now we're clearly seeing that that is not playing out that way.
See, I'll tell you, look at the longer term demand triggers here, right? Why did Goldman Sachs and a lot of the foreign brokerages came out about 18 months ago and said that we are into a new commodity super cycle? There were two reasons for that. One, the $1 trillion infrastructure spending that US is going to do. That is going to be the bedrock of global demand for this decade and probably the next as well, right? Now, if you look at China as well, China, before the COVID outbreak that it has seen in the March quarter, it had actually started stimulating the economy once again. If you look at the overall target for GDP growth in China, it is about 5.5% for this year, right? And to achieve that sort of a target when almost of 1/4 of economic activity has been taken out because of COVID outbreak, I would expect that once the COVID outbreak has abated for China, they will come back with all guns blazing in terms of monetary stimulus, fiscal stimulus, and trying to get that construction engine revving up again, which will bring back demand automatically in the second half.
Well, again, a lot of people have been talking about commodity super cycle, as you said, about 18 months back. But what they didn't probably, factor in was the conflict in Russia and Ukraine, which has considerably changed the overall equation, and the fact
for the better.
Not really, because there's also on one side causing demand destruction. The second thing what they didn't probably see coming was the sharp rise in interest rates. Inflation would go to such an extent that central banks would step in and be forced to increase rates. So that is clearly something that the supporters of commodity prices did not clearly see.
I like to quote what Aditya Mittal, the CEO of ArcelorMittal, said in a recent con call right after their Q4 earnings, that if you look at the longer term trajectory of the steel sector, he's very, very positive that the long term fundamentals are intact and they are going to remain positive. Now you talk about price, right? That you say that there is uncertainty about what is happening on the price front. People are not very sure whether higher prices will end up causing demand destruction and therefore end up eventually leading to lower prices. Now, where is the price argument here? There are two facets to look at here. You start off with the supply chain issues, right? There has been under-investment in the supply market, in the commodities market all over, from copper to aluminium to steel and oil. Why? Because of ESG policies and a lot of the ESG funds asking a lot of these companies to divert their investment from away from these sort of things, and the decarbonization thing that is happening because of climate change policies that a lot of companies are adopting, right? Apart from that, you look at what China itself is doing. China, as we know, is the biggest commodity consumer, but it also is the biggest commodity producer out there, right? After China, the second biggest would be Russia in terms of producing commodities. Now, China itself, in its 5-year plan, has stated that it wants to get away from a lot of these high fossil fuel consuming sectors. It wants to decarbonize, which means that it wants to have better, higher functioning facilities that basically are not a burden on the climate.
See, just one thing about China, they set out targets, but just like with the data, sometimes it's very hard to see what they're actually up to. In the past, over the past 18 months, there have been times when they said, okay, the real estate speculation is getting out of hand, let's clamp down on it, right? And the moment things start getting tight, they again stimulate. Same with steel, okay? Now, if you look at the April trade data across, metals, it's showing a very, very divergent trend. So, aluminium production has gone up and so has exports, okay? Steel, there's slightly, production was low. That's because of two factors. One is the COVID-induced lockdown, and the other is also the fact that they're trying to decarbonize. But with China, you never know. They say something and there is an immediate flip-flop. So, even if you look at the World Steel Association's projections, they have overall cut down projections for this year by almost 64 million tons. That's the global outlook, while they're still positive on India. But India, again, if you look at it, during the Jan to March quarter, steel prices have kind of risen, but that has also hurt demand. So consumption is going down. So there is clearly resistance to higher steel prices.
Santo, you are being a little myopic if even when you talk about China or if you want to talk about India. See, when it comes to China and your skepticism about their policy, I'll just like to quote what Roy Harvey of Alcoa, the CEO of Alcoa, and who has dealt with the Chinese market for decades now. Alcoa has dealt with that market for decades now, and he says that there is enough, activity on the ground in China in terms of long-term planning, which suggests that there is confidence that China will come through on its long-term plan for decarbonization, for capping, operational facilities when it comes to steel, when it comes to aluminium, and that is going to keep on supporting price. On one hand, you have US spending $1 trillion. On one hand, you will probably see the Chinese economy, Chinese government coming out with pro-growth stimulus packages to boost demand, right? On the other hand, you have supply constraints that is happening because of China cutting down on facilities. When you talk about Indian producers at this point of time, what has been the 2-year story, right, for Indian producers? It's been price rises and great growth in exports, right? Right now, Indian producers see the decarbonization policy in China as an opportunity. They don't see it as a threat, right? They see it as an opportunity to take China's place in the export market. And that is what they have been doing. There is a reason why Jindal Steel is out there scouring the world to get coal, so keep its plant running. Because it's not that bothered about what is happening on a demand scenario here. It's more bothered about that it will end up losing out on a big opportunity in the export market.
Couple of points, CJ, I would like to make here. One is that look at just at the stock prices. Look at where Tata Steel and SAIL prices are right now. Okay, Tata Steel made a high of about 1591 in August last year, and since then consistently it's never been able to go beyond that. Look at SAIL. SAIL is now quoting close to a 52-week low, despite considerable improvement in its operating parameters. What this is indicating is that market is now not willing to give the same discounting that it was willing to some time back. And if you look at the World Steel Association release last month, they make one point very clear. Okay, there is going to be demand from all what you say, but interest rates is the joker in the pack. High interest rates invariably hurt demand for construction and automobile, just about everything. So what market right now is saying that, look, there may be demand, but we don't see it at the same pace as earlier, which is why you're seeing the stocks coming under pressure. So I'll be very cautious on all these stocks at this moment.
Santo, metal stocks are always known to react much more than markets do when there is turmoil, right? These are high beta stocks. These are also stocks that have made a lot of money for investors. So when you are seeing, when you want to take profits, you will always take profit from your biggest winners, right? That is general tendency in the market, and that is what we have seen playing out here. I agree. Tata Steel, a lot of Hindalco, you look at NMDC, you look at Vedanta, they have come considerably off their highs. But given the arguments that I have given on the demand side for the long term, and on the pricing side, on the supply side, and the pricing support that it will give in the longer term, where you are seeing blood right now on the street, I am smelling opportunity, my friend. Tata Steel, Hindalco, and even SAIL, if it can get its debt act right, it has been trying to reduce debt over the past 2 years, trying to utilize the the supernormal profit it is making through higher prices and bring down its debt. If these three stocks can continue to, these three stocks will be my longer term bet, and I will be lapping them up like anything in this sort of a correction. Yes, in the next 6 months, they may not go anywhere. Probably they will fall even more from these levels. But I will buy every dip on this sector, because the longer term opportunity here, I do not want to miss out on it. I mean, these guys could probably help me become financially independent in another 15 years, my friend. So I'm not missing on that opportunity.
Well, just one point about commodity stocks in general, CJ. If you look at, they are never long-term plays. If you were a buyer in Tata Steel in 2008 and still holding today, just look at the kind of returns. Same goes for SAIL, same goes for Hindalco. You play the cycle right, okay?
I am. That is what I'm saying.
The stocks have now fallen almost 30% and could fall another 30% from these levels, which then mean that they have to rally by at least 100% to get back to where they were.
The point that I made for commodity cycles hold true for commodity stocks as well. These are sharp corrections in a longer term bull market. They will always be an opportunity when you are talking of a 5 to 6 year bull market in a commodity market, right? So we have seen this in stocks play out as well. We are seeing it playing out in the IT sector, but nobody would say that the longer term story for IT sector is has gone out of the window, and everybody needs to just dump these stocks and get out. And I would hold the same argument for commodity stocks. I feel that this is an opportunity, and do not miss out on it, my friend.
Well, CJ, we don't have to clinch the argument today itself, because this is something that's going to play out over the next coming weeks and months.
I will call you from my yacht, after 15 years, and we will see who has turned out to be right.
Well,
talking about Asian Paints, right?
Well, yes, Asian Paints yesterday reported its fourth quarter numbers. Now, on the good part is that there's been fair bit of volume in its decorative business, volume growth in its decorative business segment, 8% growth, and also while there's been pressure on margins, Q4 numbers were in line with what market was expecting. So a decent set of numbers, but I still wouldn't be really bullish on Asian Paints at these prices.
Why? It's a quality stock. I thought somebody like you would love our Asian Paints. quality earnings, consistent returns, right? That is what the argument is.
Yeah, see, there are two sides to value investing. You know, CJ, it's not just about quality, quality, quality. It's also about quality at what price. And right now, if you look at Asian Paints, yeah, I mean, there are supporters who will say that this will consistently compound over long periods of time. But, you know, at about close to 100 times price earnings, I would be wary of the stock. Well, the market has just opened.
And it has opened in the green as suggested.
As CJ had claimed, rather.
Absolutely. Claimed, suggested, not claimed. I'll not want to run away with all the glory here. But yeah, I mean, we are seeing a very decent start here. If you look at the advances and declines, almost 2 stocks are rising on the NSE for every 1 stock that has fallen at this point of time. Mid caps are doing pretty well. They are outperforming the index at this point of time with a 0.7% uptick.
And Tata Steel is up about close to about 1%. HDFC is up about 1%.
Yeah.
So metal stocks seem to be rebounding today.
Absolutely. I mean, I told you, a lot of people will see this as an opportunity.
We are just in the first half an hour of trade,
yeah,
my friends.
Let's look at some of the the stocks that are actually helping the market be in the green at this point of time. Is Bajaj Finserv, HDFC, Tata Steel, ICICI Bank, HDFC Bank, and Wipro, who are leading the gains on Sensex at this point of time. So it seems that bank and IT definitely are, and of course metals definitely are among the sectors that are leading the gainers or the winners on the market at this point of time.
Some of the other stocks to take a look at, Gujarat Gas Q4 numbers were quite a surprise. You know, there was so much bearishness over Gujarat Gas stocks in general, but Gujarat Gas managed to come out with a good set of numbers. Most importantly, it was able to hold on to its margins. It managed to keep costs under control really well. That's been a big surprise. So probably you could see the stock moving up.
I am skeptical that Santo it can hold on to these margins, although the management has probably suggested that they can. But let's remember, there is another price hike coming in September. There is no way that natural gas prices in the domestic market are going to be at the levels that they are in April. They are probably going to rise because globally, a lot of the natural prices, gas prices at international hubs such as US, UK have risen. So that is going to translate into domestic prices. And I don't know how they are going to manage to sustain these level of margins in the June quarter and the September quarter.
Well, I think already, you're seeing some bit of softening in gas prices. This trend could continue, and even otherwise, people do get used to higher prices after a point in time. MRF, again, disappointing set of numbers there. Net profit has almost halved, so a big shocker there. Input costs have risen considerably, and we've seen some disappointing numbers from C8 also. So in general, it seems to be a rough patch for tire companies at this point.
This was expected, Santo. I mean, we know how auto sector has behaved in the past 2 quarters. It's not been very easy given the higher costs, given that they are passing on the costs and therefore the volumes are taking hit. On top of that, they are facing with production issues because they can't just get any semiconductors out there, right? But there is hope for a company like MRF because there are signs now emerging that the auto cycle is turning. After a 4-year down and out downbeat cycle, there are signs emerging that probably in the second half of this year, you could see auto sales recovering pretty well and very fast because rural income may rise. We have a good monsoon coming up if you go by what the IMD is projecting, and with the agricultural prices going up, that should automatically boost a lot of the farm incomes out there, especially with the government taking care of the subsidy part on the fertilizer side. So I am pretty hopeful that MRF, if probably taken from a 6 to maybe 12 months point of view bet, it could turn out to be very profitable.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it.
Yeah, and please post your comments on the feedback section below and follow us on the social media links that you can see at the bottom of your screen. For rest of your financial news, stay tuned to moneycontrol.com and the Money Control app. We will see you sharp at 3 p.m. with all the day's action. Till then, have a great trading day.
Thank you and have a good day.